Well, we're back with you here on a very active Thursday. I'm Marlin, your tour guide to the ag commodities. So glad you could join us today. It has been a very busy Thursday because we got a lot of USDA data that actually was very supportive to our soybean trade for a change. And I want to review, in case you missed it this morning, let's take a look at the weekly export sales numbers. And on the weekly numbers for corn, they were okay at 408,300 tons. Soybeans, though, they stole the show at 2.34 million tons that were sold last week. The wheat, I have to admit, was a disappointment at 185,100 tons. But on top of that, now that was a good soybean number, but then we had overnight sales. And here you had two overnight sales. And they were to China and also to unknown destinations. One was a batch of 201,000 tons to China and 132,000 tons to unknown destinations. So we'll add them to the total, and we'll count those here in another week or two. So let's see what the market is doing. They seem to be rewarding the market numbers that came out this morning from USDA. On the corn board, with our quotes from bar chart, we have December 3 higher at 681.25, and it's still hovering about 2.5 cents under its high of the day right now. Now the soybeans, they are really performing strongly. We have November 20.5 higher at 13.93, and you have January up 18.75 now, and it cleared the $14 benchmark. We're now at 14.01.5 per bushel. Let's shift over now to the wheat market. Now things kind of went stale here in Chicago. December wheat, we're down 0.75 cents at 840.5. Look at that high last night, 855.75. So we're 15 cents off of that right now. If we shift over to the Kansas City market for hard red wheat, you have December down 1.25 at 940.5. In the Minneapolis market, that would represent our spring wheat. We're 1.5 higher on December at 955, still about 11 cents off our overnight high. In the cotton trade, you have December now 22 points higher, but still floundering at 78.51 per pound there. Chris Swift is with us. He is with Swift Trading. He's based in Nashville. Well, kind of a surprise here this morning. And the soybean market kind of taken off, and the wheat market is back on its heels here. So how do you describe this market action overall in the bigger picture for the week?
I think the best word to use is volatile. And that's something that we've discussed over and over again, Marlin, is the volatility. The markets are really not trending. We're not seeing a trend in corn. We're not seeing a trend in the beans. If there were a trend, it might be in the wheat market kind of resuming that downtrend. But other than that, we're just kind of marking time until we can get this crop into the bins and see what the actual of it is, and then go forward from there, trying to figure out how much we're going to have in the future.
I wanted to take a look at the crude oil trade. We noticed this morning there's a big move there, and of course we have a lot of geopolitical things going on all around the globe, but here we go again. November futures on West Texas crude now at $88.01. That would be up $2.46 per barrel. That you would think would have to be offering a little bit of support here to the corn and maybe soy oil right now.
Oh, sure, absolutely. Anytime we get the energy markets, because grains are partly energy now, so we can always expect that. And it's interesting to watch the energy markets in the same manner. They're not trending either. We kind of looked at the early part of this week where things started drifting a little bit lower and kind of thought, okay, maybe they are going to resume those down trends. The diesel fuel maybe had completed its move to the upside. It's at new contract highs this week, while the crude oil and the gasoline market were just kind of so-so. So, yeah, I think overall the energy is still well needed, and we still have a lot of money. Consumers still have a lot of money, even though it may be shrinking pretty fast. They still got enough to fill up those gas tanks.
Right now, the U.S. dollar index is down about 500 points on the day, and you have the Dow Jones Industrial Average the other direction. We're up about 378 points right now. We'll pause. We'll come back in a moment, and we'll take a look at livestock trade next. Well, let's take a look at our livestock trade, and we'll bring in a little help from Chris Swift, too, to analyze what we're looking at. Okay, on live cattle, on the big board here, we have the December contract, 2 cents higher. We're now at 151.37. So we're within, about 15 cents of our high of the day. Hanging right in there, but February 37 higher at 154.62. Interesting, we're mixed if you go out into the far out deferred months for next year. Now on the feeder cattle market, This is showing nearby strength on October, but that's it. We're 40 higher on October at 175.62. But check out November. We're down 55. And now you have January and March over 90 cents lower. January down 92. We're at 179.15 as we speak. And on the lean hogs, currently you have December now 95 higher. And we're at 86.42. Meanwhile, February down 57 at 88.42. So the most negative action has taken place on the nearby months. That would seem to maybe indicate some bear spreading taking place. Chris, can you confirm that or not?
Not really, especially when you look at the feeder cattle market, because that October is going into expiration next week. I think in the feeder markets, we're looking at the basis. Traders have put on close to $6 on feeder cattle futures over the last 3 days, and the index has dropped too. So that divergence in the basis right now, everybody is in expectation of expansion, and they want to bring those cattle in. They think that maybe we're starting to go see a few less cattle being placed on feed. Unfortunately, I think the drought has probably continued the heavy placement of cattle on there. So I think it'll be hard to get a lower number in that placement, but yet we know that the higher the placement number is today, in the future, how much lower it will be then.
When you look at a live cattle chart on that December contract right now, does it tell you that we're getting into really overbought territory or not?
With the cash market up here, not really. The cash markets are trading around 150. Boxes put on $3 or $4 in the past week. They're above 250 again now, hugging around 253. So no, I think all we're seeing really in that market is the swapping of margins. We see that the retailer still has the highest amount of beef prices on their goods. We've seen the boxes kind of trade back and forth and the fat cattle trade back and forth. And all that is just margin adjustment. The packer's paying a little bit more for cattle. He's getting a little bit less on the beef market to try to keep it moving to the retailer. And the retailer right now is believed getting the lion's share of the consumer's dollar.
Interesting. Well, thanks for joining us and explaining that, Chris. Always look forward to our chats. Chris Swift of Swift Trading with us. Janet, that's a look at our markets. Back to you.